in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. War tensions flaring up once again. Israel and Iran exchange missile strikes, threatening peace prospects. Oil jumps on renewed tensions. Brent soaring, hovering near $98 a barrel. Bull market test. U.S. stocks stage a modest rebound after AI concerns weigh on investors and after that jobs report. So it has been a brutal session in some areas across Asia. The yen above 160 and the Kospi just seeing a massive sell-off, a little bit of a catch-up trade. Let's get to it all now with Winnie Su for the latest from Asia. Winnie.
Good morning, Bonnie. It's been a pretty bad day for Asian markets. We're looking at the MSCI Asia here down more than 3%, its biggest intraday loss since March. And also it's headed for 3 days of declines already. Now, several factors in play, including the expectation for the Federal Reserve to raise rates and also higher oil prices amid the escalating geopolitical tensions. And hence we have the tech-heavy gauges in Japan and Taiwan both losing more than 3%. Now you flip the board and take a look at what's really driving declines today in our region. It's in fact in South Korea with the Kospi closed down more than 8%, and that's being dragged by the two chip makers, Samsung and SK Hynix, both down more than 7%. Now we do have the South Korean won in fact strengthening by about 2% and outperforming Asian peers as authorities unveiled a new set of measures to support the weakness of to support the strength of the currency.
For sure, a fantastically busy session. Winnie, thank you so much. Winnie Su there. Now let's get to London for a look at Europe with Justina Lee. Justina.
Good morning, Vonnie. Now, with the move higher in oil, of course, it's no surprise that the Stocks Europe 600 is in the red today, with the energy sector basically the only positive sector today. Now, of course, when it comes to the bond market, we're also seeing a reaction to that higher oil price, with short-end bond yields rising kind of all across Europe. And of course, that's also coming after that move higher in treasury yields. Now, what I find interesting about the move today is that we're seeing the German 2-year yield up 3 basis points, but actually the UK yield up 6 basis points. And the reason for that is that we're seeing a bigger reaction in the pricing of kind of where the BOE is going to go next. And if we flip the board here, we can see expectations of where the UK policy rate is going to end up by year end. And we can see a pretty big move higher to the extent where basically traders are now expecting a 50 basis point hike by the end of the year. And that's kind of coming up from the end of last week.
Justina, thank you so much. Justina Lee there in London. Let's begin with oil here in the United States because we are seeing that grind higher. Even just in the last couple of hours, we've moved to above 97 on Brent, but that is the front month contract. Partially, this is thanks to the Houthis coming back in, their voice now being heard once again, saying that they will not tolerate any Israeli-linked ships in the Red Sea, which is a different theater from the Hormuz Strait, and the possibility is that that could escalate on that side of things as well. And of course, the renewed volleys over and back. Important to note, though, that if we look at the December contract, we're still trading below $90 a barrel. Let's move to equities because we had that massive sell-off that accelerated into the close on Friday after the blowout jobs report. We are seeing a little bit of a risk rebound today. Stephen Englander of SocGen saying that the risk negative sentiment after the jobs report is perhaps unwarranted because unit labour costs are being held down. As you can see, listen, it's not massive at the moment, but we'll see how it progresses throughout the next few hours. And given what's happening with the renewed tensions in the Middle East as well, this might change. For the moment, though, that almost 5% sell-off on the Nasdaq 100 might be being arrested. Jensen Huang, of course, adding his comments to it. We are still up more than 14% on the Nasdaq 100, I should point out, year to date. Let's take a look at the bond universe, though. That is fascinating. We're seeing a massive move at the front end. So we're up another 4 basis points, having risen 10 basis points on Friday. Not so much, though, when it comes to the middle and back end of the curve. We're only up about 3 points here on the 30-year yield. That's about a total of a cumulative 6-point move there. 2-10 spread at 38 basis points. So we are seeing a little bit of flattening. Let's get to some individual movers now. Back over to London and Chloe Melly.
Good morning, Bonnie. We are seeing the electronics company Flex and the semiconductor company Marvell Technology move higher this morning as they will be included in the S&P 500 later this month. This, of course, comes at an interesting time because SpaceX has just been denied this accelerated path to index inclusion that it was asking for. But those two will be included, and we can see that reflected in those shares in the green this morning. Moving on to Nurex, which is seeing a huge boost this morning, soaring in pre-market trading, more than 54% after a $2.3 billion deal with Roche, getting access to a experimental blood cancer drug from Nurex, and that will really broaden its cancer portfolio. We're seeing a huge boost there for that stock. And finally, staying in pharma, we are moving on to Eli Lilly, which is also in the green today because a potential competitor, Zealand Pharma, came out with some clinical results that were seen as slightly disappointing from investors. And then also at the same time, Eli Lilly has its own clinical trial results, which mean that it might be able to expand beyond weight loss, beyond diabetes, and towards things like sleep apnea, for example. And so we're seeing this positive sentiment around Eli Lilly this morning, and we're up about 4% for the company.
All right, Chloe, thank you so much. Some stocks to watch there with Chloe Melly. Coming up this hour, an exclusive interview with Sikander Rashid of Brookfield. That'll be live from London Tech Week. So, Israel and Iran exchanging missile strikes on Monday, despite President Donald Trump's calls for both sides to stop fighting. Israel says it struck what it calls military targets in Iran after the Islamic Republic earlier launched missiles towards Israel. Bloomberg's Abir Abu Omar joins us from Dubai. Tit-for-tat strikes, potentially even worse than that at the moment. Abir, what do they mean for any peace talks ongoing?
Good morning, Vani. So yeah, look, the situation is evolving pretty quickly since the morning. What we saw happening overnight is Israel hitting Lebanon, hitting the capital of Beirut, the southern suburbs there, Hezbollah retaliating by hitting the northern part of Israel. And then what we're seeing happening in the early hours of the morning is that Israel has been hitting Iran directly, some western cities in the capital Tehran, including Esfahan and Tabriz. It also hit a petrochem plant where Iranian officials had to evacuate personnel out of that. We saw comments coming out earlier from the foreign ministry spokesperson of Iran, Ismail Baqai, saying that these attacks and the latest round of hostilities ensues a sense of distrust between Iran and the United States and casts a shadow really over the broader peace talks that we have been talking about over the past 2 months that are going to lead to the MOU that opens the Strait of Hormuz and then extends the ongoing ceasefire for 60 days before discussing some other concessions. But then when you talk about the ceasefire itself, it's already been fragile over the past 2 months. And today marks the 100th day of the war in the Middle East, Vani. So when we talk about a ceasefire and a truce that is ongoing, that is really in question this morning as these hostilities escalate to levels not seen since April 8th.
Yeah, 2 months ago, I mean, these are serious tests of that ceasefire. Also, the Houthis back in the fray now. Abir, that was something that markets had been worried about. What have they come out and said?
Yeah, and look, you're seeing Brent prices in particular kind of react to those headlines about the Houthis. So what they came out and said a few hours ago is that, and the Houthis are backed by Iran, of course, in Yemen. They've been active in those regional hostilities for years at this point, but they haven't been active during this war as much. But they came out a couple of hours ago and said that they will have a ban on all Israeli movement in the Red Sea. And Vani, remember that the Red Sea has been immune kind of from the regional hostilities. It was the Strait of Hormuz that's been bearing the brunt of the lack of movement in tankers and ships across the waterway. But now, with the Red Sea being in question, that brings the escalation of oil prices getting higher into question even more. And so something to keep an eye on and a development that's dangerous, and we're definitely keeping an eye on for the rest of the day and the week, Fani.
Yeah, and that's where many Saudi ports are as well, Abir, and even these new pipelines that were going east-west would have unloaded and loaded in ports on the Red Sea. Abir, thank you so much. Abir Abu Omar in Dubai. NVIDIA CEO Jensen Huang says the global stock sell-off is a buying opportunity. Here's what he said during a trip in Seoul.
With respect to the stock price, everybody should be very excited. They can now buy stock at a cheaper price. And it's absolutely true that the future of AI is very bright. It is it is a foregone conclusion that AI will be infrastructure for the world.
Joining us now is Bloomberg's Skylar Montgomery-Koning. So Jensen Wong giving us nice investment advice there. Skylar, will markets or traders for that matter listen?
Yeah, I mean, I think the fundamental question is whether or not you've really seen a change in what's been supporting the market, and that's really been earnings. And I think the answer is probably no. So what we saw at the end of last week was tech was under the pressure. That started off because Broadcom had some negative earnings guidance. So certainly that doesn't speak to earnings in general for the tech sector, which are still pointing to very strong seasons ahead. And then that was made worse by, on Friday, we had a very strong non-farm payrolls report. And that fed into higher yields on the back of this expectation that the Fed would hike at least once this year, if not maybe 2 times or more this cycle. Now, what I will say is that typically when you get yield rises, yes, they're bad for equities because you have financial conditions tightening, because it makes borrowing costs more expensive, but they typically don't weigh on the equity market for a sustained period of time if the reason they're moving higher is because of growth. So we know that growth is still quite strong from a non-farm payrolls perspective. That doesn't mean we won't have these kind of wobbles along the way, particularly when we have U.S. inflation data later this week that's expected to come in very, very hot. But it does mean, I think, generally this is more of a correction than it is a kind of sustained bear market that would require a big turn in the earnings expectations for these companies to be sustained.
And of course, the SpaceX IPO later this week, I mean, what do these conditions portend for that? Could it save this dip in some ways?
Yeah, I mean, I think certainly we're getting a little bit more worried about yield rises. I think that there's a different reaction function that you'd expect in terms of the US than you would for Europe and the UK. Because what you've seen is the AI trade is supporting growth quite significantly in the US right now. You also have Iran happening with oil prices being sustained at a high enough level for long enough that you will get a growth and inflation impulse. Now, that is growth negative for the U.S., but not as necessarily so as it was previously. The Boston Fed put out a paper at the end of last week that essentially says that they see no unemployment impact from higher energy prices that we've had so far, but you still get an inflation impact. So that means there's more of a worry of inflation persistence if growth is strong in the U.S. than there is in Europe and the U.K., where I think there's an underappreciation of how much kind of demand destruction is already in the pipeline.
President Trump saying over the weekend the Fed would be wrong to raise interest rates. Is there going to be a concern pretty soon in the market that he is getting involved with the Kevin Warsh Fed, even though he had said Kevin Warsh could do his own thing?
I think we have largely moved away from that story, and that's because conditions have shifted so much from an inflation perspective in the U.S. that it would be very, very hard for Warsh to say that his base case is a cut. I think, too, because you have Powell staying on the board, there's this recognition that you do have 12 members that are all voting, and they've all shifted more in a hawkish direction as you've had inflation come in hotter. That's not so much a concern anymore, and I think particularly if you look at what's driven the move higher in yields, it's largely been real yields. So if you're more worried about inflation de-anchoring, you'd see that long end rise because of term premium or because of break-evens, but because you've had that kind of flattening that you were just talking about, that's an expectation that the Fed will hike and keep it under control from an inflation perspective.
All right, Skylar, thank you so much. Bloomberg's Skylar Montgomery-Koning. Now, 2 other top stories trending on the terminal this morning. Shares of Monte Paschi surging after Intesa offered to buy the bank for $35 billion. A takeover would create one of Europe's most valuable banks and boost Intesa as a leader in the Italian market. Intesa's offer comes a day after Banco BPM pitched a merger of equals with Monte Paschi. HSBC CEO George Elhedery says people will remain central at banks even as AI becomes widespread. He spoke to Bloomberg from an HSBC conference in London.
I need human judgment. I need human decision making. I need human accountability at the core.
IMF Managing Director Kristalina Georgieva says the world needs to build foundations that can withstand shocks that have become more frequent. Speaking on the Bloomberg podcast, Leaders with Francine Lacroix, she also said that organizations must reorganize and recognize inequalities rising from AI. Coming up, airline executives grapple with soaring jet fuel prices. We'll bring you the latest from the IATA gathering in Brazil. This is Bloomberg.
forecasting lower growth, principally as a result of the negative impact in the Gulf.
To start to see futures in jet fuel go down, right? It's going to take longer. It's not going to be quick, right? But things are coming back on track.
Supply will get very tight because it's been impacted by the crude supply and then by refining capacity.
If the fuel significantly spikes, we're going to have to raise ticket prices to compensate for that.
We are finding that our consumer has an insatiable appetite for premium experiences.
Time will tell. It depends on what's happening with the economy, what happens with oil prices.
Those were some of the airline executives speaking to Bloomberg from the IATA General meeting in Rio de Janeiro. Bloomberg Opening Trade co-anchor Guy Johnson joins us now from Rio. So Guy, we heard some of the concerns there. What would you say are the key priorities? What's on executive minds right now?
So what they're talking about, Vonnie, is the fact that they've probably got visibility over the next few weeks. They think they've got fuel for the next few weeks, maybe months, but weeks certainly is what they're talking about. After that, things get really tricky. Nobody's really kind of prepared to commit to the fact that prices are going to come down. They do worry, as Ben Smith was articulating there, that you could see further spikes. You've just been talking to a beer about kind of what is happening in the Gulf today. We could see prices going higher from here. So that's the risk at the moment. And at the moment, demand is holding up. But you raise prices further, does demand continue to hold up? The last few years, demand's been super strong, and it's proving resilient now. But you keep pushing prices up in order not to squeeze these kind of quite stressed businesses' margins. Do you start to see maybe the consumer pulling back? At the moment, the situation in the US looks fairly strong. The jobs report, as we saw Friday, looks fairly good, as a result of which maybe the consumer holds up for now. But there is there is little expectation that actually we know what's going to happen next. The next few weeks, yeah, sure. After that, we don't know.
Sure, and of course, many people would have already been anticipating summer vacations. They may have already booked, or they may have booked anyway because we were so close to the vacation time. But once we get through the summer and fuel is still expensive, assuming it is, will all the airlines make it, Guy?
Well, that's the big question now. And the answer probably, Vonnie, is no. Not everybody's going to make it. The big groups, and we've talked to plenty of them here, Air France, United, kind of what's happening with Air France, KLM, IAG, Lufthansa, those kinds of groups will make it. They have the balance sheets to be able to survive it. But the smaller airlines that don't have the balance sheets, that can't hedge in the way that the bigger airlines can, they are going to be the ones that maybe start to struggle as demand begins to drop as we go into the winter. But as you say, fuel prices remain high. That's just going to squeeze the margin. That is just going to be really tough for those kinds of businesses. And then the question is what happens? Because those airlines still have good good airport slots. Those are valuable. They still have delivery slots coming from Boeing and from Airbus and from GE and Rolls-Royce, and those are valuable. So the big groups are thinking, you know what, come the autumn, maybe there's going to be some opportunities here. Maybe actually this crisis produces consolidation, quite significant consolidation within this industry. And that's certainly been one of the conversations we've been having with a lot of CEOs here in Rio.
Well, and certainly equipment. The Ryanair CEO telling surveillance just a couple of weeks ago that he'd be interested in buying airplanes, right? Just from an order flow perspective, is it too presumptuous to expect that airlines will still take delivery of, airplanes ordered?
I think some will. And you're already starting to see evidence that some are beginning to give them up. These slots at Airbus and Boeing, because of the shortage that we've seen of aeroplanes and engines over the last few years, are super valuable. So as weaker airlines maybe start to give them up, other airlines are going to be looking at them and potentially looking to take those on. I was talking to the Etihad CEO, and he was saying he's on the phone every few days to Airbus and Boeing. Do you have any slots? Can I get extra airplanes? Can I get them earlier? He believes that actually the Gulf carriers are going to come out of this okay, and as a result of which he's preparing for that and is looking for those aircraft that others potentially are going to be giving up, Vonnie.
Fantastic interviews, and looking forward to hearing some more. That is Bloomberg Opening Trade anchor Guy Johnson. Thank you. Coming up, a frontrunner emerging to challenge LA Mayor Karen Bass in November's election. A look at that and what else is making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, a race to watch in California. Nithya Raman, a progressive member of the Los Angeles City Council, pulling ahead now of reality TV star Spencer Pratt in the LA mayoral primary. The Times points out it's still officially undetermined who will face Mayor Karen Bass in the November contest, with more votes to be counted, but late returns are trending heavily in favour of Liberals, who make up a majority of the city's electorate. Next up, the Wall Street Journal reporting SpaceX's years of courting the national security establishment are paying off, with the US government SpaceX's largest single client. The Journal says revenue from the government will climb sharply over the next few years. And on the Washington Post front page, President Trump walking out of a Meet the Press interview when challenged about claims around the January 6th, 2021 riot at the US Capitol. The Post said Trump appeared agitated when asked about the $1.8 billion fund he has sought to pay, claiming they were victims of politicized prosecutions. The exchange lasted about 4 minutes. Coming up, oil soaring as Israel and Iran exchange fire. We'll have more on renewed tensions in the Middle East next. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. War tensions flaring up once again. Israel and Iran exchanging missile strikes, threatening peace prospects. Oil jumps on renewed tensions. Brent hovering near $98 a barrel. Bull market test. U.S. stocks stage a modest rebound after AI concerns weigh on investors. Let's take a look at those markets then, because oil, as you can see, Brent above $97 a barrel. Now, if we look at the December contract, we're still pretty calm out there. We're under $90 a barrel still. Nevertheless, the prompt month contract up a good 4.5%, not just on the renewed strikes on both sides, picking up momentum now as the hours go on, but also on the Houthis re-entering with some rhetoric to the effect that they are banning all Israeli-linked ships in the Red Sea, the Bab el-Mandeb. Another theatre for this war. We have index futures in the US pointing to a rebound today after that sell-off picked up massive steam towards the close on Friday following the blowout jobs numbers. The Korean exchanges really showing the catch-up effect today. The Kospi triggered the circuit breaker, was down 8% today. Russell 2000 and Nasdaq 100 futures, though, pointing to nice gains at the open. Perhaps it's Jensen Huang saying, everybody buy the dip. Who knows? We also have a massive move in bonds, particularly at the front end, as you might expect. We're up another 3.5 basis points after that 10 basis point move on Friday. Little bit less of a move further out the curve, particularly at the 30-year end of things, but we're still well above 5% right now on the 30-year. Let's get to some individual movers now for some stocks to watch. Here's Chloe Milley.
Good morning, Bonnie. Let's start with the two companies that are set to join the S&P 500 later this month. And so we have got the electronics manufacturing company Flex and the semiconductor company Marvell Technology, which has been one of the big beneficiaries of the AI boom. And so both of those companies will be joining the index a little bit later in the month, and we are seeing them both jump on the back of that. Moving on to another massive mover this morning, and that is in the pharmaceutical sector. We've got Nurix, which is up almost 50% this morning on the back of a $2.3 billion deal with the Swiss pharmaceutical company Roche. And Roche will essentially get access to an experimental blood cancer drug, and that will help it expand and broaden this cancer portfolio. And we are seeing investors in Nurix react very positively to this massive deal this morning. And finally, let's go over to Italy, where Monte dei Paschi is up after receiving two different offers from Intesa Sanpaolo and Banco BPM. And so this will trigger a wave of deal making in that banking space in Italy, after what's already been a lot of different deals there, including Monte dei Paschi's own acquisition of Mediobanca, which happened last year. So definitely a space to watch going forward.
All right, Chloe, thank you so much for the update. Chloe Melley there in London. NVIDIA CEO Jensen Huang saying the global stock sell-off is a buying opportunity. Here's what Huang said during a trip in Seoul.
With respect to the stock price, everybody should be very excited. They can now buy stock at a cheaper price. And it's absolutely true that the future of AI is very bright. It is completely, it is a foregone conclusion that AI will be infrastructure for the world.
Joining us now is Bloomberg's Morwenna Conium. So Jensen Wong giving us a little financial advice, Morwenna, but is it enough to put to bed some of the fears that we saw around Broadcom's earnings and how obviously there's a sentiment out there that there is some frothiness, if not more, going on here?
Well, we're looking at US futures this morning and we are seeing a bit of a recovery, but that was after a big AI-driven sell-off on Friday. And that continued through Asia, particularly overnight, with the Korean Kospi ending up down about 8%. Really quite significant sell-off there, and there is a lot of questioning still as to how far the AI rally can go. Is it running out of steam? And there's concerns about capacity as well here in the UK, as well as just investor appetite. A lot of dependency on a few names we're seeing in all around the world, and I think that those concerns aren't really going away anytime soon, even if we see a bit of a recovery today.
Well, and of course, it wasn't just the Broadcom earnings, right? Then we had the blowout jobs report, which put it into everybody's mind that perhaps we'll get a hike by the end of the year, maybe even potentially more than one. Now, obviously, nobody knows what's going to happen. The first meeting under Fed Chair Warsh is going to be next week. So, I mean, is one hike by the end of the year enough to arrest this rally, even if we do get it?
Well, it certainly it is not going to support the rally. And I think what we're seeing is those rate expectations being felt around the globe. We saw Asian bond yields rise a lot overnight, and this morning in Europe, bond yields are rising. I think a lot of that is actually down to the energy shock, particularly in the UK's case. We're seeing those rate hike bets being ramped up for the European Central Bank as well as the Bank of England. But the overall sentiment and concern about Fed hiking, after that stronger than expected payrolls report on Friday, ahead of inflation this week, I think that's where we might see whether it's going to keep going in that direction or not.
Morwenna, thank you so much. Bloomberg's Morwenna Conium there. Oil surging after Iran and Israel exchanged fire, threatening that fragile ceasefire in the Middle East. Yemen's Iran-backed Houthis also announcing a blockade of Israeli ships in the Red Sea. Joining us now is EMEA News Director Will Kennedy. I want to start there, Will, because the Houthis are back in with some rhetoric at least. How much had there been any Israeli activity in the Red Sea anyway?
Yes, it's an important statement of intent from the Houthis, who have largely been absent from this conflict so far. And the Red Sea has become an absolutely key to keeping oil markets as well supplied as they can be in this situation, because Saudi Arabia is exporting millions of barrels from its Red Sea ports that it can't get through the Strait of Hormuz. What matters now is how widely the Houthis follow through and what they mean by Israeli-backed shipping. In the past, they've taken quite a broad interpretation of what's linked to Israel. So the market will be very on edge, but I think it's important to say at this stage that this is a rhetorical intervention and we haven't seen any action by the Houthis in the Red Sea yet.
Have the Saudis capacity to defend themselves at those ports? I mean, these are the ports the Saudis are depending on for the new pipelines that are being built as well, right?
That's right. They are, and it is a critical piece of infrastructure, and they will be very worried by any Houthi threat. But I think it's important to bear in mind that they have been quite explicit about saying that they will target Israeli-linked shipping and not a broad-based effort. That said, of course, in the minds of ship owners, if there are attacks in the Red Sea, it will make them think twice about sailing through that waterway and the very narrow passageway that runs between the Red Sea and the wider Indian Ocean. But as I said, right now this has been a rhetorical intervention and not anything more dramatic.
All right, Will, thank you so much. Bloomberg News Director for EMEA, Will Kennedy. For more on how these renewed tensions could affect peace negotiations, Bloomberg's Kasia Klimashinska joins us from Washington. Kasia, can you summarize what's happened in the last couple of days? You had President Trump basically saying Netanyahu is going to do what I say because we're deciding the outcome of this war, but yet it doesn't seem like that's actually what happened.
Vonnie, yes, in fact, I have some breaking news for you. President Trump just put a new announcement on Truth Social. He urged Israel and Iran to stop shooting. That's interesting. Obviously, it shows what's at the top of his mind, that he's concerned about these renewed attacks, just as the markets are. As you mentioned, we have this move up in oil, in Brent oil, particularly, because otherwise President Trump stayed relatively quiet throughout the weekend. There has been some actions from the U.S. Central Command, where the U.S. was trying to allow some movement through the Strait of Hormuz. And Trump gave a couple of interviews, which kind of had the same theme that we have now in this Truth Social. He urged Iran to keep talking. He still hopes to have at least a tentative deal with Iran. And he also urged Israel to not retaliate. Trump doesn't want those attacks to continue. He also, Trump gave this interview to Financial Times, where he said that Israel will basically have to agree with the deal that he himself, Trump, strikes with Iran, and Israel will just have to follow.
It's interesting, though, he also said that there was going to be no unfreezing of sanctioned money and so on. So we'll see what he says later on today. As for the new Fed chair, he really has his first meeting next week, and everybody will be curious as to what he has to say. Trump did say that a rate increase would be wrong, even though he had just said a couple of weeks ago, after the confirmation ceremony, that Kevin Warsh could do whatever he wanted.
We all know that President Trump wants interest rates to go down. So he was very upset when we had this blood jobs report on Friday that showed that the job creation in May exceeded all the expectations, and markets went down. We had a very significant decline in S&P 500. So President Trump took to Truth Social and urged stocks to go up instead of going down. And then he continued on this message. He also gave an interview to NBC in which he said, good news should be good news. So the good jobs numbers should not lead to decline in stocks. And yes, Trump addressed this concern that investors now have, that the very strong U.S. economy will lead the Fed to increase interest rates instead of cutting them. Trump said that this is not fair, that there shouldn't be increases in borrowing costs when the economy is strong, that in fact the Fed should lower interest rates, even as he also said that he will let his new Fed chair, Kevin Warsh, do what he thinks should be done.
All right, Kasia, thank you so much. Kicking us off this Monday, Bloomberg's Kasia Klimaszinska. Now to other top stories trending on the terminal this morning. Cracks in Asia's regional risk bellwether. South Korean stocks plunged as investors pulled back from AI bets, threatening the world's biggest rally. The Kospi index tumbled as much as 8.8%, triggering a 20-minute trading halt. The sell-off was driven by chip makers SK Hynix and Samsung. Some investors see the move as a technical correction rather than the start of a prolonged bear market. Chinese President Xi Jinping received an elaborate welcome in North Korea for his first visit in 7 years. Kim Jong-un personally greeted Xi before a military ceremony, highlighting what both sides say is a, quote, unbreakable friendship. The visit comes as China attempts to reassert its influence over North Korea. Over 500 Ebola cases have now been confirmed in the Democratic Republic of Congo. A report released Sunday confirmed 27 cases in the last 24 hours and noted 117 suspected cases. The effort to contain the virus has been complicated by armed conflict and medical supply shortages. Coming up, Sikander Rashid of Brookfield joins Bloomberg's Tom Mackenzie from London Tech Week. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Let's now take a look at AI infrastructure demand. Brookfield Asset Management seeking to raise around $50 billion for AI infrastructure. Sikander Rashid, Brookfield's head of AI infrastructure and head of Europe, is live now at London Tech Week with Bloomberg's Tom Mackenzie. Tom.
Vonnie, thank you very much indeed. Yes, very pleased to say that I am joined by Sikander Rashid of Brookfield Asset Management, head of AI infrastructure, as you said, and head of Europe. Sikander, thank you very much indeed for joining us. You join us at a moment when there is anxiety in the public markets about AI, the AI bubble, and whether or not we're getting closer to that moment, and that bubble, if it is a bubble, bursting. As you sit with your view on investment around infrastructure, in AI, that long-term view. How concerned are you? How anxious are you about this bubble, if that's what it is, and the risks around it?
Look, firstly, Tom, thank you so much for having us. Look, last week was quite eventful. S&P was down 2.5%, NASDAQ was down 4%, and more importantly, the Philadelphia Semiconductor Index was down 10%, its worst performance since 2020. Now, having said all of that, I would say part of this was expected. There are pockets within the market that are getting a bit exuberant, right? And over the course of this year, the semiconductor index was up 80%. So a 10% pullback is not bad. I think what's more important is the underlying demand for AI and AI infrastructure remains very strong, and we have a lot of bottlenecks, whether it's the wafer, the semiconductor manufacturing, or power. These are genuine bottlenecks. And the last thing I'd say, Tom, is whilst the technology firms are building the brain, Brookfield Asset Management is building the body. And the body is land, power, real estate, data centers, and compute. And we're seeing unprecedented demand across the board in all of those categories.
How convinced are you, as you make those investment commitments, that the end user is going to see that return on investment, and under what time frame?
Yeah, look, it's a great question. I would say two things. The first is we have strong conviction because we are building the backbone of AI for some of the best technology firms in the world, for some of the best sovereign governments in the world that have the best credit ratings in the world. So we're not spending capital speculatively, and in fact, are investing capital with these counterparties over the long term, where we get a return on and off of our capital over the contract term. So we feel very confident that our investments and our capital remains insulated to any AI bubbles. The second point, which is the technology firms themselves that are spending all this CapEx, that are signing up to these long-term commitments with Brookfield, these companies have stepped up their CapEx spend, whether it's Microsoft, Amazon, Google, Meta, you name it, from $400 billion just 5 years ago to $800 billion. And I would say...
That continues next year.
Yeah, probably we'll hit $1 trillion at some point in the next couple of years. We have to remember, Tom, these are some of the best companies run by some of the smartest people in the world. And if you heard their earnings from last week, almost all of them are starting to report positive ROIs, which is very encouraging.
Are semiconductors or chips still cyclical, do you think?
Yeah, look, chips or semiconductors in general have always been cyclical. There's been GDP linkage, and GDPs, there's ebbs and flows. I would say what's different now compared to what happened in 1993 or the late 90s or a few times during the 2000s, what's different is the underlying demand. AI is expected or will be the most transformational general purpose technology that will require $10 trillion of capex in the next 10 years, and semiconductors, wafer, etc., are a fundamental piece of it, and we will probably see quite strong demand in the next few years.
How attractive is Europe as an investment destination, and the UK, given the energy costs and constraints that we're seeing here?
Yeah, look, over the last 3 to 4 years, it's been fascinating to watch the US-China AI race, and it was predominantly driven by the fact that all the AI models, which have been the primary driver of capacity or infrastructure capacity, are either American or Chinese. UK or Europe, for that matter, does not have a large-scale LLM, or does not have a hyperscaler. Having said all of that, I think UK and Europe remain really interesting investment destinations for AI infrastructure, because the next wave of AI will not be training. It will be inference. And training is research and development. Inference is revenue. Inference is application. And given the local data sovereignty laws, it is very critical for Europe to have its own local compute. And I believe UK and Europe will have an enormous runway ahead of them to basically build capacity for inference and applications.
How much of a potential constraint are higher interest rates? If we think about the ECB, expectations they hike rates, the Fed, expectations of 25 basis points comes through this year, to what extent could that curtail or factor into your investment decisions?
Look, I don't expect it to have a material impact, because the reality is interest rates are still relatively low compared to where they've been historically, right? And because of what's happening in the Middle East, there's an expectation of slightly higher inflation, and that will have some impact on the interest rate, short-term interest rate curves. But when we're investing capital, we're investing in assets for 15, 20, 30 years, and therefore we take a long-term view and usually look past the noise, whether it's short-term inflation or short-term interest rates.
How much are you looking to invest in Europe, in the UK, over the next 2, 3, 4 years? Can you give us some numbers in terms of your investment commitments for this region?
Look, we are one of the largest international investors in the UK. We have over 70 billion pounds in assets under management across real estate, power, infrastructure, credit. Going forward, we remain bullish on the UK, and we expect we probably will double the size of our business in the next 5 years.
Double the size of the business in the UK over the next 5 years, and political uncertainty is not a headwind to that?
Look, when we invest in a country, the focus normally is, does the country have rule of law? Is there respect for capital? UK has both ingredients. We've been here for multiple decades, and the expectation is we'll continue to look past these political cycles, because again, when we're investing over the longer term horizon, and our views on UK have not changed at all. Because
what are the most attractive investment destinations in Europe right now? France, Germany, Italy, who stands out?
Look, depends on the vertical, but I would say across the board, some of the larger economies in Europe continue to be really interesting as it relates to AI infrastructure. We're here in London at the UK Tech Week, so let's talk AI infrastructure. I think for AI infrastructure, probably France is one of the best destinations. And the reason for that is France has abundant power, it has abundant nuclear power, it has an administration that is quite focused on ensuring Europe is independent and Europe is self-sufficient, both in terms of technology as well as the AI infrastructure. And we just last week increased our commitment to French AI infrastructure from 20 billion to 30 billion for all those reasons. And I believe France has an important, really important role to play for all of Europe as it relates to AI infrastructure.
Sikander, thank you very much indeed for your time. Really appreciate it. Sikander Rashid, Head of AI Infrastructure, Head of Europe at Brookfield Asset Management. Vonnie, back to you.
Fascinating, Tom. Thank you so much. That is Bloomberg Tech Europe anchor Tom Mackenzie there bringing us that interview. Coming up, SpaceX's potentially record-breaking IPO will get you set up for your trading week. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead this week, and boy, is it a big one. We get some inflation reads. We'll get US CPI data on Wednesday, PPI on Thursday. We'll be watching the details. The ECB delivering its rate decision on Thursday, widely expected to raise borrowing costs by 25 basis points. And then SpaceX is expected to debut on the Nasdaq on Friday in what may be the largest IPO ever. Let's take a look at some macro movers. This is your setup as we head into the Monday trading session. So Brent crude, at least the front month contract, up quite substantially above $97. We're backing off just a little bit. We are seeing a rebound, so it looks like the dip buyers may emerge again today. Bear in mind the Kospi played catch-up, was down 8% in the session, and that two-year yield continues to climb, but just another 2 basis points there, up about 12 basis points since Friday.